Good day, everyone. How's everyone doing today? Hope everyone wasn't up all night watching Georgia. Hi, Irina. Hi, Scott. Kevin, how are you? And Brock, the RTY, the guy who pointed our eyes towards it, Peter Goodburn, will be with us tomorrow. What a great call by Blake Morrow yesterday that the Dixie would hit a new low. If the Democrats won, we're still diverging down here. Oh, 1-1 it looks like. Okay. All right. Well, Mitchell like that. I thought it was both of them. Anyway, like I was saying yesterday when I was using the metaphor of a courtroom, and Euro was yet to be seen, but Cable was convicted. So with this break in the dollar to new lows, Cable's put in a failing rally. So, dollar weakness was an opportunity to short it with stops over the highs. So right for this one, right to sell a rally. The other instrument that was convicted with a key reversal on Monday with S&Ps. And I remember I was talking with Steve when he was on earlier, when he was on yesterday, and said selling rips to 37.30 to 40 might be the right thing to do. And it was pretty close. I was 44. This still looks negative to me. And you're probably wondering, the S&Ps are down like 0.29% and NASDAQ's getting crushed. Already took out Monday's lows. And it might be about yields. Tech stocks do not like higher yields, and we're above 1%. The only missing ingredient so far is a rally in US dollar yen. Here's yields. They actually gapped. How about that? So I think decisive day. We'll see. Maybe we're going to 130, 150. I don't know if I would, buy bonds on a day like this. So there was really no flight to quality on Monday. And here's my daily look at US dollar yen. I know it'll be controversial because, no one wants to trade it, but we're turning here. Here's my daily look. See that wedge? Right to it. And Blake's number for resistance at 104 comes in around this wedge line too, and this moving average. We get over 104 with yield spiking, it's going to fly. So potential, look at the divergence on multiple time frames. The daily diverge from this low and this low of a falling wedge. And if you believe in wedges, we're going to the top of the wedge up around 110, but one step at a time. 104 is going to be the big area for this. Everyone see this falling wedge. So we diverged on the 4-hour time frame, well above 30 last night. On the 2-hour time frame, held above 30, nice divergence. And so yen looks good. Short cable, long yen. I don't know how you would pair that up. Just trade them as an individual instrument. We still need the S&Ps to close under 3704, which will give us a 2-week reversal. NASDAQ is already trading under its 2-week reversal. So where does NASDAQ have to close by Friday? And remember, we could have another inflection point day on Friday into the NFP. But let's see, the NASDAQ 2-week reversals at 12,710. So we're like 95 points underneath the 2-week off number in NASDAQ. Looks like if we could get through 12.5, we could accelerate. Right now, maybe the bulls are going to say it's A, B, C, but look at this pivot at 12.5, and we almost went to 13,000. So maybe we could head down to 12.1, 12,000 on this. Any questions on what I've covered? Hello, Keith Sterling. Nice to meet you. And yen, part of this, the other reason to be long yen is yields. Okay. So here's your 30-year yield heading up pretty good too. FOMC. Okay. The RSI is confirmed in which instrument? Which instrument? In the SPY? I don't think so. Oh, you mean this right here? On this time frame? Okay, on the 4-hour, yeah. On the daily, no. On the 2-hour, yeah. Good eye, Amira. I'll go with the daily because it agrees with me. Hello, Sinatra. Okay, Blake, how are you today? Nice call on the dollar yesterday. You warned or forecasted that we could get this break to new lows with the election in Georgia.
Hey, thank you.
Yeah, good call, bro.
Thank you. Hold on. Almost there. Can you hear me all right?
Yeah, clear.
All right, cool. I just sent out a tweet regarding what's going on in the markets, and we should, let's talk a little bit about this, Dale. Let's talk a little bit about what happened. So, and we were, we've been discussing, the Senate elections. And I've actually had a lot of requests from people that don't live in the United States. Like, can you please explain what's happening? So we had two seats that could possibly turn the Senate over to Democratic control, and it looks like Ossoff claims victory in Georgia. So it's still going, but he's claiming victory. Yeah, that politicians tend to do that sometimes. Anyway, Dale, the problem is that if these two seats are taken by the Democrats in the event they are, and it looks like it will be, to be frank. Chad yesterday said, in Georgia they're going to do, and he's in our chat room, and he's in Georgia. He's like, people are going to down ballot vote, which, like, I'm going to vote all Democrat, I'm going to vote all Republican, doesn't really matter. And so if that's really the case, and which I think it probably is, we're going to have a Democratic House, Senate, and president. So what does that mean? Well, that means to us, stocks, you can see stocks are bid right now, and they'll probably retain their bid this morning, because you're going to get people that want to buy stocks as we're going to get stimulus, right? So you're going to get stimulus, you're going to buy the stock market, let's get long stocks, yada yada yada. And then what happens after that? What happens after you get a lot of stimulus, Dale? Do you know what happens after that?
Yeah, yields rise, right? And that's what they're doing, they're front running it.
Well, we get stimulus, and let's say we get a couple, infrastructure spending things that happen, and bills that pass. You get your stimulus checks, maybe
inflation,
stimulus packages. Then somebody's got to pay for that.
Yeah,
and then taxes go up.
Yeah.
And so and the reason why you're seeing this divergence right now with the NASDAQ stocks coming off is, as you pointed out, yields are probably going to go up, taxes are probably going to go up. The U.S. government, with a Democratic, basically a democratic government all the way around, they're going to go after these tech companies. They're going to go after them on a regulatory basis, for taxes, for, for everything. You got to pay, you got to pay for all this, right? So tech stocks are trading heavy. You're going to see the Russell 2000 looking a little bit better, which it is. We've rallied to new all-time highs where cyclicals are at. And that's really what's happening in the markets right now. You're seeing this, rotation, and you're seeing overall dollar weakness. But if stocks start to show some signs of weakness today, we could see a stock market rally, or a stock market sell off and a dollar rally, which that's something that, I think the market is, not positioned for. Everybody is very short dollars right now. Citigroup put in they put in a buy euro dollar last night at 122.80, when we were down here. And I was sitting there going, really? But I mean, hey, you can't knock them, because look at it. I mean, look where we're at right now. I mean, we've rallied. So, the euro continues to rally, the dollar continues to sell off. But if we do get a sell off in risk, you're going to see some of that unwind. And that's the thing that I think we all need to be paying pretty close attention to today. And look, I've already picked up a couple of dollars down here. Nothing big, and I definitely don't want to be aggressive right now, but you're starting to see, I want to show you a couple things, and then we're going to go into the charts, Dale.
Hey, buddy.
Yeah, we're going to go into, you look at gold. Gold hit the 618 retracement, pretty much a horizontal resistance here, and came off really hard. And that's a little alarming if you're short dollars and you see precious metals come under pressure like that. That's a head scratcher, right? Silver, the daily sentiment index yesterday for
90s.
silver was 91 or 90. I can't remember. One of the two. So it's extreme readings here. And you can see silver's coming off. So, the precious metals have stayed higher. They've stayed really well bid. You've had,
they don't like the higher yields today, Blake.
They don't. And so that's, again, yields are going higher. And did you show everybody bonds?
Yeah.
I was
I
in
showed
the middle of
the 10-year yield I showed.
Yeah. And so the 10-year yield, we're back above 1%, right? We finally climbed through resistance. That's a big deal.
That's a breakout.
It's a breakout. It's a breakout. Now, will it hold? It should. We've talked about this. This is the last time I drew it. The last time we looked at yield back in November. But we're finally above it. I mean, this is the highest levels we've been in yield since early last year. So
it measures 150, the whole formation.
This whole
triangle, ascending triangle breakout of 50.
Yeah,
bips, and 50 above the breakout. Yeah.
Let's take this. Yeah, I mean, yields go up. What's the market going to do? I think stocks are going to come down. And I think NASDAQ stocks probably more aggressively than everything else. The S&P may trade a little heavy. Maybe Russell will outperform. But you just got to be careful that this move in yields is really going to start to play into the rest of the market. The dollar could really bounce here. We talked about it yesterday about, we had an inverted head and shoulder pattern setting up, but I said, you got to watch for new lows. One last new low towards 89 in the dollar index.
Almost got there.
Big divergent relative strength before we bounce. And, we could very well bounce today. That's why I'm starting to take a little stab at some dollars down here. I'm not getting aggressive. I want to see, things turn. So let's talk about each individual currency pair and talk about where those turning points may be if they, rear their head. So we're going to start off with the euro. So the euro, I had an order last night to sell euros at this 161% extension, which is also, oh wait, we just had ADP numbers come out. I totally forgot ADP numbers are coming out. So we lost 123,000 jobs in December. What was the market looking for? Let's go.
100. They were looking for up 100 or something. Oh, that's for Friday, non-farm.
Oh, whoops. Let's pull it up here. Forecast at 88,000. And so we just got, we lost 123,000 jobs. So that's going to be a miss. Correct? Yeah, because
They were looking for a gain, and we have a loss in ADP.
We have a loss. So
yeah,
I don't know if the market's going to like all that. You know what I mean?
I think they're looking on NFP, Blake. What I heard was adding 100,000 jobs, which isn't a great number. But, you know, I was thinking, Blake, and if it's not today, you know, classically, if we had a weak number on the NFP and the dollar does go to 89, you know, it makes one more new low and bottoms, and then reverses on a weak number would be classic on Friday.
Yeah, and that's possible, right? Yeah. It's entirely possible.
Everything is.
Yeah, in this market, everything is possible. You're right. Yeah. So what we're going to do, guys, we're going to go through the bias chart. So as I was just, you know, I forgot the ADP numbers were coming out. I forgot that's, you know, it's been such a busy last 24 hours. Like I was, you know, sitting in front of my computer till 9 o'clock last night, and that's pretty late for me. And you know, trying to watch this, and my eyes were burning, and so it's been, and we were in the chat rooms and everything. And by the way, just before I go into all the charts, yeah, this is, I want to show you, and this is just the chat room from, like, I don't know if yeah, I guess he'll pull up stuff from last
Plus,
night.
Blake, if you're like Samson lost a lot of his strength after his hair was cut. You remember that?
Yeah, that's a good point. This is all, you know, you can just see like all the, you know, just chatting going on. I mean, it's just been nonstop. Like but I'm like, the problem with that is I don't, it's like I'm trying to keep my head on straight, you know, with everything going on. All right. Anyway, so trendline resistance here in this, you know, slight ascending wedge that we have in the euro dollar comes in at 123.70, and then I had an order to sell euros at 123.60 overnight to hit this 161% extension from here. It didn't get triggered, and my order is still out. Actually, I pushed it up a little bit to this trend line here just in case, you know, we get a final push up there. But I'm going to say that right now 123.75 is resistance. We're obviously in a very bullish trend. As you guys know, it's been that way. Intraday support is right here at 123.10, because remember, that's the breakout point. But really key support for the euro, which which has to hold for the bulls to stay in charge, basically, is 122.50. That's not very far away. You know, you may think, oh, you know, that, you know, no way we're getting down there today. But look, you know, if stocks start to show some weakness and the dollar comes roaring in, you know, with buyers, it's possible, right? So, yeah. You know, oh, here's the cable. Let's go take a look at it. So the pounds, you know, kind of.
See, what do you think of cable being the Lone Ranger, not making a new high, with the euro making a new high?
Yeah, you know, I know it isn't, and I'm going to go 135 resistance or support, 137 resistance, right?
Yeah,
and it's in 135 support is right here, and the reason why that's so important is you can see it's like a lot of previous highs, you know.
Yeah.
So 135 is support, 137 is resistance. It is not making new highs. That is a little concerning, but at the same time, I don't know if I'd really want to short the cable based on, you know, what has happened with Brexit. You know, I think this might be one of those situations, as if the euro comes down to, like, let's just say the euro comes down to 123 or 122. the sterling may not have much downside, or if we see action in other, currencies, maybe, the euro just kind of, or the sterling just kind of sits here and consolidates. I'm not bearish, but I'm not bullish. I just am.
Neutral,
I'm just, yeah,
strongly neutral.
I am. And so therefore I'm going to keep it on. I have to keep it in bullish. And let me tell you the reason why. The reason why I have to keep it bullish,
Because of the breakout.
because of the breakout. That's correct. If you look at the long-term descending wedge breakout, as long as we're above this 133.50, 134, and you can take it to a weekly chart. So, or, here's a monthly chart. Like, as long as we hold above that trend line, this is a
Yeah.
month, right?
Yeah. Yeah.
I can't be bearish. Right at this moment in time, I don't have much of an opinion on the sterling. Let's take a look at the Aussie. So the Aussie broke the channel resistance, and frankly, I don't know where the next resistance is. I mean, this could end up being an overthrow, which, Dale, you love these when they do them, right?
Yeah. Yeah. Unless I'm short before they don't.
Yeah, right. I guess, looking at this this currency, if we get back below 77.30 today, you got to be a little careful with it. So I'm going to write down 77.30. It is bullish. And I mean, the next resistance, I guess, is like 78.50. I mean, we can do just a quick intraday fib extension from here. So we can do this just to kind of see. Shoot, that's past that 161% extension. I mean, it's hard. It's really hard to say, I don't know.
That's
honestly,
okay.
looking at the Aussie, it's like, I don't know where resistance is. When you start getting breakouts like this, I start marking up round numbers, which, is it possible that we make a move for 79 cents today? Why not? Not saying that we are. I'm just saying, it would be possible. So I'll just write down 78.50, which is, above the highs. Let's go over to the Aussie. So here's the Aussie, the Kiwi. Here's the Kiwi. So supporting the Kiwi, I mean, this is the same type of thing as the Aussie. As long as we're above the 72.40, bullish. And you guys know it's extremely bullish here. Resistance, I mean, that's 73.15. I'm going to write down 73.50. Again, you just start rounding numbers, because in looking at like half cent and 50-cent levels, half cent and round numbers, because it's breaking out, it's like you have to kind of go with it. Here's the dollar Canadian. So the dollar Canadian, I want to point something out about the dollar CAD. And this is a really, if you look at the lows from 2017 to the high, we're at the 78% retracement. We pretty much hit it overnight. It's 126.20. And frankly, if we get above 127, we should head higher. So I'm going to write down that number. And I'm going to do this while we're above 126.20. I'm going to keep us in range. I know we keep hitting new lows, and then it ends up being a false breakdown. New lows, false breakdown, new lows. Is this going to be a false breakdown? I don't know. We have to get above 127 to find out. But you got to be a little careful, because also crude oil just pivoted off of major resistance. If you didn't see it, go take a good look at crude and go take a look at the weekly charts. I don't have a lot of time this morning to do that. So let's go look at the dollar Mexican peso. The dollar Mexican peso is down at key support. This is really critical support down here, 1968. What I think might happen here is we might see a move below the lows and then a break back up. So just keep your eye in the dollar Mexican peso to take out some support here. Support is at 1970. It's pretty key. It's holding it for now, but we might be able to break it today. And then resistance is at, well, it's at 20. So all right. Dollar Swiss, bearish. Continues to be bearish. The dollar Swiss here, 161% extension. Let's go over to the daily charts and take a look here. And you guys, this is the 161% extension of the, this is the move from the COVID spike higher. 161% extension comes in at 87.35. That might be the ultimate downside target here. And if you guys wonder why I put asterisks next to very important levels. So if you know you're near an asterisk, that means you got to be really careful around those levels. You know, if we get to this 87.35 and you're short, you know, you got to be a little careful. So resistance now is going to be this previous support, which is current resistance, which will be 88.20. Hey, Dale, you had some comments about the dollar yen a little earlier, didn't you?
Yeah, bro.
Yeah, what were you saying about the dollar yen? I was in the, and for those of you guys that missed it, I was like in the middle of like updating some.
On the daily, I have a falling wedge with.
Oh, that's what it was.
And, you know, I think it's going to rally with yields. So, you know, maybe we'll get this correlation back there. See, yeah, there you go. That's it. And look at where the top line is anchored. And your number 104 comes in a few days, and back over 104, it could fly. So
yeah, so you know the 127% extension of this last move right here, and there goes the dollar Mexican peso below support. Just letting you guys know it's cracking here.
Yeah,
which I expected it to. I expected to drop through the 1970 level, trip some stops. Let's see.
Plus, DSI is still 83, and you know, for his you know, bullish yen or bearish, depending upon the way you pair it, it's really been a grinding decline. You know, unlike you know, any other dollar pairs that have been directional to the downside, like you just showed Swiss,
right.
Canada, but yen, I wouldn't be short, that's for sure.
Okay, and you know what? And you're right. It tends to follow yields. We've got to break out in yields.
Yeah.
So you have to be really, really careful with, you know, this pair down here. I'm you know, some of the guys in my office, they've been talking about possibly being long the dollar yen.
Yeah.
And I see the reasons why, especially if yields are going higher. I'm not long the dollar yen, but I see exactly what Dale's talking about. This is a descending wedge for now. And let's get rid of some of these. Let me get rid of this. Like there's so many lines on here. I just want to remove them. This line needs to be removed. This line I'm going to keep because this is previous support, you know. So today, if we got above like 103.20, that would, you know, that would kind of, you know, argue the potential of a, you know, of a reversal. So, but yeah, descending wedge. Okay, good call, Dale. And I think we should keep an eye on it. 104 is definitely resistance.
Yeah.
Let's talk about the dollar index. The dollar index is near that, you know, 100. Okay, well, first of all, let's go back to the daily chart. The 161% extension of the COVID move comes in at 89.40 or 89.50, and we're below that obviously today. Okay, so just this red line right here.
You have something
Is
at
that-
8909 too. That's 1.618 of something, just in
Of
case it
this,
drops.
it's of this. Yeah, it is,
Oh,
Dale. That's exactly
okay.
right. It's the 161% extension of the last move higher.
I
And
see.
that's where I thought we'd get, you can see I have an alarm set down there and we talked about it yesterday. I thought we could reach down for 8909 and we still possibly could today. So I'm going to
Or
write
into
that.
the NFP too, that could happen on a weak
It could,
number.
yeah,
Yeah,
for
that's what
sure.
I'm thinking.
It's definitely bearish, but obviously we're seeing a lot of divergence and there is risk, about being short the dollar down here, especially with, gold looking like it might be putting in a reversal, maybe crude oil,
Cable
and I
not
think if
making
you
new highs. There's a
what's
few signs.
yeah, yields are moving up.
Yeah.
So we have to get, in order to freak anybody who's short the dollar right now, to freak them out, we'd have to get above 89.50. So, you know, if we get above 89.50, I think it might start to, like I said, it might start to, freak some traders out. So 89.09 is support. US dollar Norwegian krona continues to grind it out lower, and with crude stronger, it makes sense. Channel support, we had support being 841, which is the 127% extension. You can see we're consolidating around there, but I'm going to write down 835, which would be channel support. Is bearish. Resistance today, well, let's just make the assumption we go all the way down here, which probably will happen. Resistance today should be 850, which would be the highs of the day. So, all right, talked a little bit about gold, but let's go back into it. Where is my gold? There it is. So gold, we had this breakout of this trend line. It looked really bullish. There's a lot of people bullish gold yesterday. I saw actually multiple people that usually don't even follow gold were like, oh, this is a bullish, this is flag pattern breakout, they're doing this, oh, it's bullet, and look, we've talked about it, and we talked about this breakout above the 1910 level, about how bullish that would be. But we also said yesterday we have to get above 1965 in order to take out that 2020 level or get to 2020. 1965 looks very, very important right now. And if for some reason and I'm going to put it in bullish for now, but if for some reason we come back down below 1905 here, I wouldn't want to be bullish anymore. Okay. Just a little food for thought. All right, let's go into the S&P. So the S&P now, the S&P is in this channel, this ascending channel. We had an outside day a couple of days ago. Then yesterday was an inside day. Today is just kind of a day, but it's early. If we break through 3650, you have to be careful with your longs. Okay, it's bullish now, and resistance. And remember, the trade, when you have a fully democratic government in the United States, the trade is get long risk assets, right, Dale?
It's kind of mixed, because tax policy may change on capital
That's the thing.
gains.
And if you guys are late tuning in, because we're going to be adding a bunch of stimulus, probably a lot of infrastructure spending, probably a lot of spending. Democratic government, Democrats are, that's a kind of typical they're going to spend more. They're also going to tax more. So you have to start being careful with stocks. Everybody have been, really bullish the equity markets. It's going to continue to go higher, but taxes are going to go higher also. And if the market starts to trade on that theme, next thing you know is you're going to have stocks that, kind of come under pressure. I think you should be careful with NASDAQ stocks here.
Oh yeah.
All right. And here's your bias chart. And I think Steve is here today. He in Greece, it is a holiday, right?
They
Steve?
have a lot of holidays.
Oh, he's not
the
here
Greeks.
yet. Yeah. Yeah. It's
What's it called? Epiphany Day?
No, that's in Spain.
Christmas. Oh, okay.
That's in Spain. It's Epiphany Day. What
Oh.
day is it exactly in Greece?
I have epiphanies once a week, and I take a day off.
What's that?
I have epiphanies every week, so I wonder, anyway.
Yeah. Oh, yeah. I know. Me too. Let's see. Yeah, I forget what day it is.
Yeah, thanks, Scott. It is Wednesday.
It's Wednesday. So anyway, yeah.
Oh,
so
Eastern Orthodox. That's why. Yeah.
So the euro, just let's keep a real close eye on it.
Thank you, Simon.
Really quick, what I'd like to do is I'd like to take a little bit of a look between some of these euro crosses. So here's the euro Aussie, because I got asked about the euro Aussie down here. The euro Aussie, as soon as it broke through 160, it's been pretty much, just under pressure. And this is very much a risk on trade. So in my opinion, while we're below 160, there's no reason to be bullish. We back here, late last year in November timeframe, I was playing it long off this 161, 162 level, just kind of scalping it off of here. But now that we're below 160, I don't want to be bullish. And you can see how we rallied to 160 and reversed. So what that really means for us now is a move back above 160. This is where it turns bullish. So, because you can see the multiple rejections, that's support, that's resistance, and multiple rejections here. So if you get back above 160, this is where the squeeze actually starts. And that would also coincide with stocks moving lower. And like I said earlier, if the S&P and the NASDAQ start to come off because people start going, okay, well, the market's gone high enough. We know we're getting all this stimulus. It's already priced in, but what we didn't price in is we didn't price in higher taxes. Because remember, the market's been pricing in that we're going to get stimulus. We're going to get stimulus. We're going to get stimulus. Well, now we're going to get stimulus. But what the market wasn't thinking is, whoa, we're going to get higher taxes. And that is, and it's not going to happen overnight. It'll probably be, tax hikes will probably be coming in the next 12 to 18 months. You'll start to see, legislation get passed, but the market's going to look ahead and start thinking that. So if we start to see equities come off, this is one of those currency pairs that I will be paying really close attention to, is the euro Aussie, because I am still very bullish the euro. I think the euro is, what I'm really hoping for, Dale. This is what I'm ultimately what I think is going to happen.
I'll pull back to 121.
Yeah, the euro slides down to 121, 121.50, maybe even, somewhere in this neighborhood.
Yeah.
And, we get the dollar squeeze.
Yeah.
Which seems it's inevitable, that we're going to, because of positioning, we're going to get some sort of squeeze probably within the next, couple of days here. How far we go, I don't know, but I ultimately want to be long the euro, because I do think the euro is going to 128 to 130, probably by this fall. So I want to be on the long side of the euro. I just don't want to be long, up here, based on where everything else is at.
I think, Blake, that ultimately Euro Aussie and Euro Kiwi are going a lot lower. Not because the euro is going to be doing bad, but because the Aussie and the Kiwi are going to be doing better.
Yeah, and I would agree with that. I think the Aussie, as I told you guys at the beginning of this year, if you look at
Yeah.
2021. Let's do this. Let's go to our blog. We're 6 days into 2021. Hey, I'm almost hitting my targets. That's the good news.
That was a great blog, guys.
Where is it's
Very good blog.
Where is the? I guess it would be the next page. I'll just show you. Where is our 2021 projection? I forget where it's at. Anyway, I'm looking for the Aussie dollar to hit 80 cents, then back off, hopefully back to like 82, 83 cents, you know, or wait, I'm sorry, 72. Go to 80 cents, back down to like 72, 74 cents, and then, you know, make a push into to the end of the year. So that's what I'm hoping for. You know, whether or not we get it, I mean, shoot, we're almost at 80 cents right now. So Steve, what holiday is it over there?
I think it's mostly like religious, you know, Orthodox, whatever.
It's like a family day, right?
Yeah. So it's like
Is it called Epiphany Day?
Might be. It's called Tafota, which is the lights. Yeah, I think it's probably something like that. You know, I'm me and religion. Yeah.
It's like oil and holy water.
Yeah, something like that. Yeah.
Isn't Austrian economics a religion?
No, I don't think so.
You're passionate about it.
I think it's actually a science. I mean,
okay.
I think it's probably the only scientific perspective to economics, which, you know, the more the years pass, the less scientific it becomes, at least in the attempt to interpret.
You're
like the Pope of Austrian economics.
Hey, guys, take a real quick look at my screen really fast. Yeah. This is just one of, you know, this is a Bloomberg chart panel that I have here. And you'll notice the top 8 currencies. These are the US dollar pairs that I follow. And then I change out like I'll change out Norway and the Rand and, you know, sometimes the CNH intraday just to get a different view of something. But I usually keep up, you know, the euro through the peso. Notice what dollar pairs are stronger right now: the Canadian, the Rand, and the CNH. So the reason why I point that out is because if we start to see, you know, the dollar strengthen and hit new highs against the Canadian, which is, you know, we're only 7 or 8 pips away from highs right now. But if we start to see new highs in the Canadian, you got to, and like in some of these other pairs, like maybe the Rand, pull up the lira. You know, if the US dollar, Turkish lira starts to turn, it's at its lows right now, but you know, if we start to see it turn higher intraday, then you have to start being careful of a dollar reversal. Remember, gold's down, silver's down. The market wasn't thinking that this morning. And so now you got to start, you know, wondering what other, you know, positions are, you know, could.
Well, how about S&Ps? It's been a long time that stock indexes have not made new highs with the dollar making new lows. That's a little different too, isn't it?
That is a good point. And you know, right now the NASDAQ is underperforming. Remember, that's been leadership in the markets. And as Dale has pointed out, Steve, yields are going higher, and you know, NASDAQ is not liking that. So, oops.
Hey, thank you for reactivating, Blake.
Yeah, I forgot. I clicked on the wrong
Thank
button.
you for joining.
So guys, just remember, if you haven't taken advantage of Forex Analytics, this is the time to do it, because this is where we have our special pricing. Good. You know, this is the best pricing that we have of the year right now. So take advantage of it. And if you want to try to get Forex Analytics for free, go to the Forex Analytics sponsored page, which if you open a Pepperstone trading account, you have to click this button right here. You have a live trading account, you can possibly get Forex Analytics for up to 4 months based on how much trading you do in a live trading account. I think you have to do 500K, which is, you know, 5 lots, which is, you know, for most of you, you do that within the first 30 minutes of your trading session. So anyway, I'm gonna leave it to Steve and Dale, and Stelios is out today. So you guys,
Yes, yes.
good luck today.
You too, Blake.
Speaking of the CNH, Blake, since you mentioned it, it's now 7 months of a non-stop depreciation of the pair, right?
It is, and we actually hit the 78% retracement long term just this week, and since then we've like kind of consolidated. We overshot it, and now we're consolidating. I try not to get too technical with the US dollar CNH since it is managed, obviously, you know, by China, but you got to pay attention to it because if it starts to, if you start to see some yuan renminbi weakness, then you know that's usually a sign of risk off. That's China trying to hedge, you know, some headwinds that might be coming its way. So
if you want my opinion, the fact that it's managed is even more important, because if it wasn't managed, I believe that the USD-CNH, we wouldn't have lost something like 11% that it has lost during the last 7 months, but a lot more than that.
Yeah, I mean, who knows? Yeah, for sure. Anyway, hey, guys, have a great one. I got to get rolling. I'll see the rest of you on the daily roundup webinar in 3.5 hours, 4 hours from now, whatever it is, for those of you that are Forex Analytics subscribers. Dollar's starting to firm up here. Talk to you soon.
Good luck today, Blake.
Bye-bye, mate.
Hi, Steve. How are you today, buddy?
Hey, Dale. Good. How have you been?
Pretty good. So, couple of questions. You know, you're always going to get your platinum and natural gas question, and
we had a nice, by the way, we had a nice jump yesterday in crude, since we were talking about it. Huh?
Yeah, right. Yeah.
From it testing support, to within a day testing once again resistance. That is why, you know, once again, I keep insisting on a daily basis that you shouldn't be trying to fade the trend until you actually have solid evidence that the trend has changed, even in the short term. You know what I mean?
Yeah.
And crude oil had not broken to the downside, as, if you remember, we said the same thing, as the indices had not broken to the downside, right? I mean, they made a nice attempt the day before yesterday, but by the end of the day, they had pared back, you know, most of their losses. And, you know, we got left behind with a nice indecision potential reversal candle, but, you know, the key word there being potential, right?
Yeah.
So far, no confirmation yet. So patience. Now, having to do with crude oil, back to resistance, you know, from a risk reward perspective, somebody can say that, okay, you know, this is a perfect area for somebody that, you know, really is determined to try trading it counter trend, because this is the confluence of this ascending channel, this horizontal support resistance area, and also a nice psychological level, a nice round $50 mark, right? Having said all that, as you know, I wouldn't be doing this, right? Now, having to do with natural gas, once again today testing resistance, no breakout yet. So, you know, buying it on a resistance, really not the smartest idea. My intuition tells me, though, that, you know, there is a very good chance that it will actually break higher. And, you know, if that happens, there is a very high probability that we're going to see follow through. Now, on the other hand, you know, commodity currencies, here is the Aussie breaking higher. Sorry, the Kiwi. Here's the Aussie breaking higher. Here is the USD NOK, which I'm still short. Breaking lower, where it is. Here it is. Here it is, a beautiful move lower, and it gave me the ability to add twice to this position. So it's like, you know, I said since the beginning, this is a long-term position for me, and, you know, I'm going to keep holding. I mean, I'm very, very deep in the money, and, you know, this is a very key position for me. USD SEK, if you have a look at it, looks very, very similar. Testing support, but overall very heavy. USD CAD, here it is, produced a new low. In all actuality, commodity currencies, as everything that has to do with commodities, is just propelling higher. Cryptocurrencies, once again, like exploding higher overnight. Who asked for it? Let me see. Here's platinum. Here's platinum. Clearly broken out, on its way to the next objective, which is at 1170. Here's palladium attempting to break higher as well, testing resistance as we speak. Here is copper at new highs once again. So we talked about it a couple of days ago, and then again yesterday I said that this looks again like a consolidation, and there we go to new highs. I mean, copper is just unstoppable. I mean, it can't really correct lower no matter what. I mean, all of the corrections it has produced since finding a low are more or less horizontal consolidations. I mean, no real opportunity for people that just want to join the trend to do so. Here is nickel, once again attacking the channel, and we've talked about this theme, and we talked about it at the end of last year, saying that we expect this theme to continue in the year ahead. And yes, at some point, there is going to be a counter trend move. There is no question about it. But do I really want to be betting on seeing this counter trend move? No, I don't. At some point when it starts, I'm going to perhaps protect my core position. But in all, I think that any dollar rebound and any risk of move should be faded eventually. People asking also from what I see about Aussie yen and Kiwi yen. Yeah, we can have a look at those as well. And then I'm going to go to some of the crosses to show you what I was talking about earlier. So here is Aussie yen. Aussie yen breaking higher from this channel, and also pay attention to this descending trend line resistance, right? And the 61.8. Here is Kiwi yen, having done the same thing some time ago, produced a bull flag following that, breaking through the bull flag. Keep looking higher. There's nothing else to say about it. Just keep looking higher. And having to do with what I said verbally before, because Blake was sharing the screen. The reason I said that I expect a lot more downside in the euros is just look at this. Explosive move higher. In my opinion, this was the definition of a blow-off terminal move, right?
Yep.
In the same type of manner, completely retracing this blow-off move, a period of consolidation, and now we've broken down from this consolidation. At the same time, you see that this also dates back to this previous long-term ascending channel. I think there should be a lot more downside in this Euro-Aussie move. Yes, in the short term, we might see at some point a rebound, perhaps to retest the breakdown area. But I do think that eventually Euro-Aussie will have a lot more downside to produce here. Same deal with the Euro-Kiwi. Look at the Euro-Kiwi breaking down from this long-term ascending trend line support. I think there should be a lot more continuation here as well. So I do think that against the dollar, Euro might keep performing quite nicely. But for reasons we've explained multiple times, I do believe that the Aussie and the Kiwi might actually do much better. So Euro-Aussie, Euro-Kiwi, perhaps an opportunity to have a look at Pound Aussie and Pound Kiwi once again. Just look at Pound Aussie. Testing once again, right? This ascending trend line support about to break down. I mean, very heavy price action. And here is Pound Kiwi, which had already done the move. Just look at this long-term ascending channel. I mean, the definition of a corrective move. Just look at the move lower and just look at the move higher in comparison. It took a lot more time to unfold just retracing roughly half of the move lower, and I think we've probably already started once again the depreciation, which at some point I think is going to accelerate to the downside and move a lot faster than the rebound higher actually did. Speaking of the pound, and I know that Blake obviously covered it as long as I was away, I have to say that nothing has changed here. I still see a lot of divergences in the pound USD. RSI divergence. We're still respecting this ascending channel. So I don't know. I would be very, very careful with being long the pound. I mean, you know, I don't like this. I wouldn't like this price action if I was long. I'm not saying that it's impossible for it to, you know, just accelerate higher at some point.
But it is the only pair, Steve, that did not make a new high with the dollar making new lows.
And don't forget that we've now, don't forget that we've now gone also past the Brexit developments, right? And that wasn't also sufficient in, you know, creating like, you know, some type of a blow-off move to perhaps try to do some catching up to everything else, right? So that's...
Although taxes are lower on tampons now in the UK. It's true. It was an EU tax and they were bragging about it. So just in case you need a box or two. Okay.
Okay. That's right. Very, very useful information.
Not as good as my stop sign joke, but
I'm going to immediately take advantage of that. Here is gold and silver, by the way, for people that are asking. Listen, the bearish case scenario with gold, because there are always bears out there, is like, oh, look at this. Just got rejected from the confluence of the 61.8% fib from this move lower, which was also the previous high there, right? So this is the bearish case scenario. Personally, as long as it remains above this channel, the broken channel, I see nothing more than just a pullback. And the same applies to silver, right? I mean, can we have some type of a pullback? Sure, absolutely. But, you know, do I think it's about to, you know, to accelerate the downside? No, I think this is not the likeliest scenario. I think the likeliest scenario is that we're going to see a little bit of a pullback and then an acceleration higher once again. Nothing has fundamentally changed. We're still in an environment that is unbelievably favorable for monetary metals. And nothing has changed technically as well. So, you know, the combination of the two keep me very, very bullish, the precious metals. And I don't see any reason why, you know, I should change my viewpoint. Now, since we talked about the indices very briefly at the beginning, you know, I need to say here that as a very short-term trade, and I'm going to reiterate, as a short-term trade, you can still see this rebound as corrective. So I do see the thesis of possibly at least one more push to the downside. So I can say that, you know, if you really want to be shorting risk assets here, and the S&P specifically, there is a very favorable risk reward because, you know, you can just say we're currently like, say, at 37.08. Yesterday's high was at 37.45, right? So you can risk here less than...
That's where we talked about selling it yesterday when you were showing it. I said, maybe you rip back to 30 or 40.
Yeah, so you can risk less than 40 handles there, right?
Anyone sell the S&Ps up there on the rip yesterday afternoon here in face? Give me why if you did it.
To perhaps look for a target there at 36.25, which, as you see, is almost 100 pips away, right? So there is a nice 2-to-1 risk reward ratio. So yeah, it is a counter trend trade, but on the short term chart, looks like it can work. right? And
Yeah.
as I said, the risk reward is really favorable. So
Pretty classic looking flagpole and flag.
yeah. I mean,
Keep it simple.
keep it simple. You know what you're risking. You can adjust your leverage accordingly to compensate for the fact that we are in a bullish trend. There is absolutely nobody that can doubt that. So just throwing out an idea there. Do we have a guest today, Dale? Because it's exactly the top of the hour.
Our friend Ronit is here.
Yeah. Speaking of which, there was a question about euro pound. So just very, very, very briefly, listen, euro pound is very choppy, right? There's no question about it. You can clearly see it here.
I gave up trading it.
Yeah. Having said that, I mean, it makes sense, Dale. I'm with you. I mean, it's.
I was for a while. It was just consuming my energy for nothing.
I agree. I don't think it's so much worth it, but clearly from a technical basis, somebody can make the argument that this is another consolidation and we can actually keep on moving higher.
Yeah.
Right. So there is. I mean, if I had to choose a side right here, right now.
That's my bias. Yeah, the upside because of cable weakness.
Yeah, if I had to choose a side right here, right now, I wouldn't hesitate to choose the upside. But as you said, I think there are better opportunities out there, right?
Yeah, and one that you probably don't agree with, the long side of US dollar yen.
Listen, I'll tell you.
Go ahead. I know it's like EG. It has been.
First of all, I haven't traded it in a long time and I haven't regretted it for a second, right?
Yeah.
Now, technically speaking, there is an argument to be made because of this trend line support. You can see it here, right?
Yeah, right.
So in the exact same context that we talked about the S&P prior to that, I mean, sure, you want to take today's low, and lean against it. Yeah, okay, sure. Yeah, you can do that.
That's what I'm doing.
Yeah, so it might as well work.
We'll see. Like everything, time will tell.
Yep, very true.
All right, so thank you, Steve.
Thank you, Dale.
Yeah, look, you're still on the beach? I saw that picture, boy.
No. I came back 2 minutes before I logged in the webinar.
Oh, okay. You and Stell and Blake and anyone else hearing my voice that has a family and you're all still together during this time when you have to isolate. Take it from me, who hardly sees anybody, pretty much alone for a year, how fortunate you are, even though you're all probably driving yourself crazy, that you have each other during this time. And shows the importance of family, even more important during difficult times than
disagreement
when everything's okay. So yeah, you have a beautiful family, Steve. You're greatly blessed. So
thank you, Dave.
With that being said, I'm going to bring in one of my trading warrior brothers. He's a proud Indian from India, and he sends me all kinds of things about the history of the Indian civilization, that they were really way ahead of the game, even from the Egyptians and everyone else in the construction of pyramids. So, what happened to you, Rohit? I thought I had. Oh, there you are. Okay. So, my trading warrior brother Ronit, how are you, buddy? Waiting to hear you.
Okay, can you hear me?
Got you. Happy New Year. Happy New Year,
same to you. Same to you. So how is everyone? So
everyone is dealing with the invisible enemy in the air. So interesting action. You want to share your screen here?
Yeah, just
Rohit?
1 minute.
The green box.
Sorry. Can you see it?
Yep.
So let me start off with something interesting apart from markets. And this is Shiva temple. It's what's the speciality? It's somewhere in southern India. It's exactly 66 meters above, in length.
Yeah.
And the beauty about it is it doesn't cast a shadow in the afternoon, just like the obelisks of Egypt and other things. And
Right.
if you convert that into 200, feet, right, meters into feet, it comes to around
Yeah.
216 feet. Now the interesting part is it is 108 into two. 108 is known to be a sacred Hindu number or sacred number all over the world.
Huh.
So again, you break it down into 27 into 8. It's the same thing. So
Yes.
how does it come into play over here? So we call something called the moon cycles, something like 27 nakshatras. So it's a lunar constellations. So each constellation is like 13 degree. So that's how I think W.D. Gann got his idea about 1 by 8 and other things. So this is 27 constellations of 360 degrees. So I just thought that this was interesting. And the most interesting part about this is that there are exactly 8 temples in India at exactly 79 degrees, 79.4 degrees or 79.2 degrees. Exactly.
Huh.
And Shiva is supposed to be the creator and destroyer in the Hindu mythology. But there are a lot of Shivlingas. It's like these meteoric stones which are there all over the world. Even in Russia, they found something interesting. So that's how I think W.D. Gann got 8 points. That's why they say 1 by 8, 3 by 8, and it goes on like that. Like
you've told me that Gann did travel to India.
Yeah, right? Yeah, that's right. Yeah,
and Jesus.
But we don't have any proof for that. But yes, there was a trade route from southern India called Kerala, which was very way advanced. It was ahead of its time, and they used to do a lot of spice trade between Rome, and they went through Egypt. That is, they had to pay taxes in gold, something like 20% or something like that. And
Wow.
in those days, we were like something like China, and we actually sold spices and got a lot of gold for it. That's why India has a lot of gold, because we always traded across the board. And that's why the GDP was more than 40% or something like 1,000 years back. That's why everybody loves India.
Yeah.
So there was a time when Romans actually saw that they lost a lot of money because of, they were losing gold, just like US was. US is right now.
Okay.
And what really happened is they demonetized this gold, like they reduced 10%, 20%. But the merchants were smart enough, and they actually they took a lot of demonetized gold also. That's why in the coastal areas, if you see in India, if they unearth some gold coins under the earth, you can see there are 10%. There is a 10%, 90% mix or something like that. So that's the old trade route. What they talk about, Silk Route.
Okay. So now everyone, you could see what Ronit's approach to the markets are, these numbers and these cycles, and I call it very esoteric work. So I find it fascinating. I hope you guys do too. So
I just don't want to start it in a normal way. I just want to create something interesting apart from markets.
Okay.
So even Nikola Tesla was actually very much involved in this 0 point energy. So if you really see, you can see the screen, right? This is called 0 point energy. So if you see one square, and then it's 2 square, and then 2 square and 2 cube, 2 power 4, it goes on like that. But you see there is a repetition of patterns, 1, 2, 4, 8, 7, 5, 1, 2, 4, 8, 7, 5. Can you see that on the right hand side?
Yes, got it.
So there is something over there that they discovered, but they couldn't continue it. Even cellular mitosis, which they talk about, it's the same pattern: 1, 2, 4, 8, 7, 5. It keeps repeating. So it's still, I'm researching on this, but there is a pattern out there, which can be used in markets. So
the creator was a mathematician.
You could say the creator was he could be there out there, but he doesn't want to show us he's there.
Yeah. But
So,
everything is based on mathematics.
exactly.
Isn't it?
There is this Fibonacci numbers or something like that. It cannot be a coincidence everywhere.
Right.
So why
Right.
everybody uses Fibonacci numbers in markets and lots of things? Why? There is no proper answer to it because it works. Right?
Yeah. Okay. So these are fib angles you're going to talk about here, huh?
That's right. So if you look at it, 360 degrees, phi, everybody knows 1.618.
Yeah.
So if you actually divide 360 divided by 1.618, it's 222. Now, you can see these in Masonic symbols also, that angle, the G angle, and it's 37.5. But technically, it's scientific in nature. When you actually see a rainbow, right, with your naked eye, you have that kind of angle. On top of the angle, you can actually see there is angle formation over there. But I'll show you how it is used in markets also. So we'll.
Very interesting, buddy.
And this is a famous temple in Konark. It's a sun temple. So do you observe one thing? It has 8 spokes. So it is used for calculating time. And again, WD Gann used 1.1/8 and other things, which was very interesting.
Amazing.
So let's move on to the markets. So US markets, again, we had a sell-off in February and it has just come back. But if you really see, it's a rising wedge. So it did break that rising wedge. Again, it is forming the rising wedge. Now, what's interesting about that, if you actually see it, I've drawn a blue arrow. That's around 375% or something like that. Okay. But from 1932 to 1937, it was exactly the same percentage. So if you actually calculate something like what was the bottom in March 09, 6469 into 4.75. That's around 37,700. Didn't we hit that? 30,700 recently. Yeah. So there is a possibility that this could be the big event which could happen. Another interesting chart in the last Fibonacci interview, I did show you about these Fibonacci extensions. So if you consider 1974 as starting point, and second point is around 1987 crash. It extends, and you can see the financial crisis 1.618, September 2008, and it started exactly to 50%. So in this area, we will experience a lot of jolts. I don't know if it will break out, but it could due to liquidity events. But this is something to note that why this is happening and why the currency should be behaving. We'll look at the currencies in the dollar. Okay. So again, it's the same chart, which is channel. It's overbought and other things it shows. There are 3 points which are very important. 1929, 2000, and recent high, 30,700. Okay.
Okay.
So let's move on to, okay. This is a very interesting chart. See, everybody says that the dollar actually, if it goes higher, the US market capital flows could, it could actually make the equity markets go even higher. But technically, this is not true. If you really see the overlay over here, the blue lines, that's the dollar chart. The US market never jumped higher till 1985. If you really see over here, 1985, when it topped out, it had just broken out 1,000 barrier.
I remember.
That's when the credit started flowing outwards. So even Elliott Wave, Robert Prechter was talking about this could be a credit event and everything should fall apart because of the Plaza Accord and other things. So what really happened over here? So they shot down yields over here and recirculated the dollar, creating globalization. Okay. So again, if you really see, whenever the dollar rallies, it could break the equity markets all over the world. So we'll see that over there, why the dollar is the key to everything. So
are you still dollar bull, buddy?
Yes. Until it breaks 88, DXY, I don't think I'll change my mind, but I would change my mind then and then, see that dollar could actually break down to something like 50 DXY or something like that. But even now, the events which are I'm looking at something like cryptocurrencies, which is a liquidity factor. We look into that charts also. where Bitcoin is actually topped out right now. I was expecting something like what caused the Bitcoin to move from 12,000 to 34,000 or something like that. So if you really overlay the recent dollar collapse was when the Bitcoin actually started spiking around 12,000. So we'll come to that chart. So anybody who wants to have exact monthly levels of Dow, when it will break down, you can actually look at it. 29,776, you can say that US market and all markets all over the world will start selling off very rapidly. So this could be a technical stuff. Okay. So now let's come to that esoteric thing which we are looking at. If this is a particular angle and you're looking at this peak, it's a rising wedge, expanding triangle. So if it started in 2009, when should it end? So somewhere in between from now and 2032. That's 100-year cycle from 1932. So that's something interesting where all these virus things, which are actually more to do with debt, and created this to actually recorner the world. We can come to that again because it's again a conspiracy thing. People will call it conspiracy.
Interesting.
Okay. So let's look at this gold. So this is very important to understand why gold could even rally if dollar index actually even goes higher. So you see the breakout point, $880.
Yeah.
That will actually set the trend for 2,800 to 4,500 in a very quick time. So we did talk about it in my previous interview.
Yeah, you're spot on gold.
Because I saw this debt which was expanding. The gold was actually expanding faster. The value of excess, that is federal debt to gold. So this is one more interesting concept, Dow gold ratio. Now during this, if you really see, it was around 14 close to elections, right? So what caused this to move over here? So that means this is a very important indicator to understand what's moving faster. So what is the breaking point of Dow now, considering gold? So whenever gold rallies, there is a problem, everybody says, right? So if you consider 14.6, roughly 15. So if a breakout about 2,000 and 30,000 Dow breaks, then all hell will break loose over here. So we saw that in February 2020, the pink line. Can you see that?
Yeah.
So that's where it actually, everything, all the assets are created, but most of the important assets are dollar, gold, and Dow. So that's how everybody readjusts itself dramatically. This is again the Gann fan, which actually talks about there is a breakout happening till it stands above 1875, 1920. It's going to launch itself to 4,500. So the dollar should not collapse. That's a very critical thing, but we have to see. This is again a technical thing which people can use to see if there is a breakout or not. 1853, where do you put your stops? Where it's going to break out? 2100, it's a confirmed deal, something like that on a monthly basis.
Okay.
So you can ask me some questions.
Okay, well, interesting presentation. So do you think that we're this pullback in the dollars that's starting to give you some signs that we're starting to bottom here around this 89.30 level, or 88 is your line in the sand? And if we take out 88, you said we could probably go to 50?
Yeah, that's around 50 or 54. So we are looking at the screen on dollar index. So this is a multi-decade dollar index chart and what caused it, and that's secondary. But what's the cycle saying? So if March 2008 was a cycle, then August 2011 was a cycle, and August 14th was a cycle. You see, there is another cycle which is coming up.
Yeah.
That's January 2021. That means all the assets are going to flip. So they're rallying into that event. So what could be that event? Probably Trump would do something and he would get reelected. You never know. Or there could be a logjam, or it could be something else. Trigger can be anything. But what causes that event is not important. When it is about to happen, it's a very critical thing. So
okay, and some of your upside objectives are, people would say aggressive, but you're talking about the dollar index maybe going to what, 196 up there?
No, somewhere around 245 to
245. Okay,
so
even more aggressive.
Yeah, basically what's really happening? It's something like Bitcoin, right? Everybody
Yeah.
short dollar, borrowed
Yeah.
dollars, and the moment there is a dollar squeeze, that is, they have to the credit event happens all over the world. Everybody has to buy back, sell the assets.
Yeah.
So this is where the real catch-22 situation in the previous interview, where I was explaining that May 2019 there was a flip which was happening. All the central banks got together and said we need to get rid of the dollar, and the US treasuries were sold. There was a chart over there in the previous interview. I don't
Yeah.
have it because I
Mhm.
hurried through this. So, and December 2019, you could actually see there is a repo crisis which happened September in 2019.
Right.
And
Yeah.
this happens exactly cyclically, like 6 months or 7 months. You can see there is a time lag. Now, March 2007 or April 2007, when crude made a bottom, you add 7 to it, it comes 7 to 9 to it, that's a credit event. Again, it'll repeat. So because the same thing happened in 2016, and Prime Minister Modi over here, everybody thought he's doing it for good reason. But there was a trial run, which was a dry run, which was done because they were not expecting Trump to come in. And I mean, it was really absurd. Like one day before Trump was elected, he announced that. So that means there is some machinery which is working towards to actually cause this event. So it's not a conspiracy. You need data to provide why it is happening and what level it's happening. So let's look at this dollar. This is what I was talking about. Now, whenever dollar index goes below 89, that's always an inflationary event. You can actually look at it in 1988, 89, 92.
Yeah.
We had emerging markets were called Asian tigers, and they did very well because they recirculated those dollars. And then after 1997, LTCM, it just flipped. That's why the crisis, whenever it happens, there is a crisis. So you can see over there 2017, 2016 over there. Can you see over here, my arrow?
Yeah.
And that's where the crude bottomed out, or the dollar bottomed out and started rallying. So this is a very important zone. So that's why they can't allow it to go above 105 or 104, because all the asset classes all over the world started breaking. And now the asset values are much higher. Everybody knows it. So you have to watch the dollar. So if Trump doesn't win or something like that, 89 or 88, that's the final stop. If it breaks, this channel is complete, and you can see it's going to be really violent. And so that's why we have to watch gold with it too. So what cracks it? Because majority of the, even if you see people like Jack Schneider are talking about these $0 systems where they borrow against bonds. So that's huge, big. So if those US bonds get into trouble, if rate spikes too fast, some event will occur and the currency starts unwinding. So our hint is US dollar, DXY, and USD yen, which I'll come on to the next one. So let's move on to the Euro chart.
I think the yen turned today.
That's right. So it's a key date today, 6th or 14th. There is going to be a huge event, and we have to watch that. And that means if 30,000 Dow breaks, you have to take a position on the opposite side. So you can see over here, it's again cycle. This is a Euro chart. So how that area is protected around that 1.09.
Yeah.
Okay. And on the upside, it's not going to break out that 1.23. We'll come on to that next.
Okay.
We also look at this is another cycle, same thing. If it actually slips and falls hard till 2027, I don't think there will be any euro left over there. So I think that the euro is going to go bust, but we'll see how it happens. Okay. So we have to look at more evidences. So this is again a Gantt chart. You can see the green line. It's a very big resistance. It had that touch in 2017, and then in 1998 and 2005. You can see there. There are multiple points.
Hey, bro. Sonny Gill is asking if you could give us the Mega Million lottery numbers for this Friday.
I didn't get it. What?
You know, we have lotteries here in the U.S., so your stuff is so fascinating. They think you could probably pick the lottery numbers for us.
Okay, Friday. I could do that. Offline.
Okay, buddy, go ahead.
Okay.
You're a hit, okay? Someone, Hugo saying coolest dude ever. Wow. So you're wowing the crowd today, buddy.
Okay,
Go
I
ahead.
really appreciate. I
All
appreciate
right,
that.
go on.
So let's look at this euro. So let's see if euro actually does spike, and we have this small inflationary rally. So how far it could get? Somewhere around 1.23, and then it forms a rising wedge around 1.35. That could mean that gold hits somewhere around 3,000 to 5,000, and
Okay.
then it flips. So you have to look at this dynamics very well. You have to watch gold, what is happening with the dollar, 1.23 if it breaks or not. If 1.23 breaks, you just short it, close your eyes and short it. So this is again euro. Now let's look at British pound. So whenever there is a euro fall, the British pound also falls. That's why it never took out that 1.3637. So last time we discussed about this, and I said that it could spike back up. It did break down, and it could spike back up, and then make a final blow. So this is a deciding factor. So all the charts are coming together. So to a credit event. So let's look at the next one. This is a cycle. You can see 1980s, 2007, then 1985 bottom, and the Brexit one. You can see over there. It's actually 4 years apart. You can call it presidential cycles, possible. But again, all these currencies are showing same thing. The agenda of 2030, that there won't be any currencies. So we're going to free float. So they already made up their mind that they can't carry this forward. And they are trying to do something with CBDC, digital currency, where Christine Lagarde talked about it. And that's, I explained in my last interview that how these guys started it in May 2019 and how she was actually elected over there at the particular time. Even Rishi Sunak, who was actually a UK exchequer or something like that, he's the son-in-law of Infosys, which is managing this Aadhaar system or something like that. So they're doing something behind the scenes to create digital India and digital, but it's actually the digital world. So this is the real key to what's really happening. Will the euro survive or the dollar survive? So this chart is nothing but a pair, USD CNY divided by euro USD. That means if this trend is really happening on the top, USD CNY will depreciate faster and euro USD will fall faster. So that's also meeting at a particular cycle. It's from 1980s, you can actually see. So you see 2017 starting.
Yeah.
And now it's actually coming together. So it's highly oversold. So we have to watch if that breaks 5 or 5.2, whether it breaks or makes. So it's a make or break for euro. Most important chart for the gold. So this is USD yen. So what everybody's talking about is going to have a pullback. But look at, would you actually buy it over here?
It depends. Yeah, it was, all it did was move sideways.
Yes, why it is moving sideways is that if it falls, there is a possibility that gold spikes and even euro starts falling apart. So that's again an event. You can actually see when we had this February 20 event, it fell very sharply from 109 or 110 to 102 or something like that. So if this pattern is complete, you can see it can go to 45. That's why I'm very bullish on gold, because there is an inverse relation post 1995 that if USD yen actually falls, gold rises. You can see 2007 to 2011 or something like that. So same pattern.
So can we break out, and that would bring in a bear? Can we break out to the upside, and that would cause a bear market in gold? Say US dollar yen initially gets to like 111 and then 120. Would you expect lower gold prices?
Yes, it could. It could actually pull back to something like 1700 or 1800. Yes.
Okay, thank you.
But that depends on where is the USD yen.
Yeah.
So if it's not breaking out 104, watch out.
Okay,
it's not,
104
it's
is a
not.
big number. If we get to 104, the wedge to me looks like 110 is coming.
Exactly.
So, all right.
So you can see the pattern over here. That's an inverse correlation.
This was your best presentation yet, man.
Oh, I actually finished it in half an hour. Normally I took a longer time, since you gave me a short time to talk about. So.
Okay.
Oh, what happened?
All right. So what's the best way for people to follow you, man? On Twitter?
Yeah, you can ask something on Twitter. I do answer. You can actually message me.
Okay. Are you managing? You told me some fund was considering hiring you for your research. Did that happen for you?
Yes, yes, it happened, and we need to set up a team which does that. So it's
Okay,
research, quant research. They are actually major in commodities, and
okay,
we wanted to do something like a quant research plus a trading firm over here from India. Nothing outside India right now. I mean,
okay.
so that's coming up well. So even in this COVID time, we couldn't move out. So finally, that guy made it. So let's see. Positive. Fingers crossed.
All right. So for those of you, I'm going to put Ronit's.
There's one more chart if you can
Oh
actually see
yeah,
my
go. No,
screen.
you have time. I'm just going to
Okay.
put this.
So
Your
this is the most important chart. Okay, this is federal debt to gold. So if what happens is if federal debt is not going to increase, if it does increase, gold actually starts selling off for some reason. But it's actually at a critical point where if the federal debt doesn't increase, gold could actually break out to 2,700. So you can see that 13,800 divided by 9,700. But the real target is if these guys are not going to allow things to fall, then from 2,700 it could go to 1,000, or something like 9,700 to 1,000. That means tenfold increase to something like 27,000 gold, which is unimaginable. It's obviously hyperinflation. So even if other currencies appreciate, this is the most important chart which I am looking at for the dollar rally. This is federal debt divided by DXY. So notice that in February 2020, it was about to break that trend, the dotted line,
yeah.
and they had to expand the debt in order to actually stop the dollar rally. And now it is actually hitting that point. You can see in the next chart very easily. February, March 20, the Fed had to actually increase the debt so that the dollar would depreciate. So this is the real problem. What Jack Schneider and other guys are talking. I'm talking in technical terms because I'm not as good as them. But
Okay.
you can see one more chart with federal debt to Dow. So this is the most important chart you got to watch. Is that if the debt does expand, how far will the Dow go? So you can see that yellow line.
Yeah.
That's the 2009 record. So that means the amount of debt is increased. Equity markets move in proportion. So if you don't like that, you can actually look at these numbers. So 29,400. If it stays above that, it has a shot at 47,400, 47,000, which is what this previous chart was talking about. So
Okay.
to the current debt, but this is again a rising wedge. You got to watch out 29,400, 29,500. If
Yeah.
that breaks,
We could
it's a
get a
confirmed
throw
sell.
over. We could also get a little bit of a throw over too, right?
Exactly. For that, you need to watch the dollar 88, 89. Are you getting a divergence or not? And that's
Yeah.
a very critical part of the game. This is a CRB commodity index. Again, it is hitting that resistance. It didn't take off like 2002, but you see the red lines, those are cycles. And it is hitting another cycle January 2021. So it could, if the dollar turns, it'll be very violent for commodities. You will get unexpected levels in commodities. You could have something like copper going down like crude. So this is again, next chart is again CRB index divided by dollar index. It's breaking out, but not yet. But it is hitting that point of confluence where it could break down. And this is again copper and crude. So they're also hitting certain resistances. So crude has not moved up, copper has moved up. So that's balancing that whole thing. But the next time it turns, what is the timeline where it will make a bottom? So if it started, the rally started in March, January, it should end by December 2021. You got to keep a watch on January to December 2021. That's 11-month cycles. And copper has this rising wedge, 3.66. So don't be bullish till it is not breaking out. But if dollar index breaks down, it will go to something like 5.5 or something like. So it's a very tight zone. This is again the US Treasuries again started falling apart. They've broken the trend. So that there is a possibility that the dollar would rally. This is another confirmation. This is another confirmation on TradingView. This is a trend line which is breaking. So it's a make or break for people who are actually long short. This is Goldman Sachs Commodity Index. This is again heading that trend line. It's still not there, but if it does turn, watch out for this whole year, the commodity meltdown, and then the whole thing will flip. One
The
of the
whole
biggest
ball
hints,
game, the whole ball game's the dollar.
exactly.
For
So
everything else, it's a fulcrum of the wheel.
exactly, it's the center of everything. So it's not going to collapse so easily. This is the most important chart, Kuwaitian dinar. That
You've
means,
said that before.
oh, sorry.
Every chart's the most important one. That's because they're all important, but go ahead.
Yeah, because you got to see data points. Why are you actually justifying what you're saying? So
Right.
Kuwaitian dinar, it did turn in January 02. You can see it's hit a cycle point, January 20. So how long it will depreciate? Till June 2027. That means commodities will be in a bear market till 2027 if the dollar rallies. You have to watch out for Trump only. So dollar index, this is the key level, 87.8. Now you know what is the level. Pink line, which you can see. And if it melts down, you have to change. You have to change, flip very fast. This is the combined index of Euro and GBP. You can see the rising wedge.
Yeah.
That's a very important thing. Let's look at the final FX things. If everything else is collapsing against the dollar, that means it's a combined index of GBP, Euro, Aussie dollar, and USD yen. It's broken the trend. It's not galloping up, but that's a danger sign. So that's a danger sign. And you can see Bitcoin. If somebody wants cryptos, watch out. It's almost ended. And if somebody wants exact levels, 33,000. That's the area to watch. Is it breaking out or not? Because it's connecting all the tops. So Bitcoin, 12,000. If the dollar is flipping, watch out. It's going to flip very fast, and don't be very bullish. If you're really bullish, you can actually look at market cap of Bitcoin to Ethereum, which has actually started outperforming. That means Ethereum will outperform Bitcoin. So I think that's it. This is Sensex. If somebody wants Indian Sensex, this is also forming a rising wedge. So
okay.
So everything is connected. So that's it.
Great presentation.
Do much more.
Great presentation, Ronit. And I appreciate all the contributions that you send me to keep me aware. And I think it's great to be proud of your heritage and then put it to work for you, and having that passion for discovery and applying it to the financial markets. I appreciate you being here today, edifying the FACE community. Thank you, my trading warrior brother.
Thank you, Dale. Thank you for having me.
All right, and I hope that this video gets you another hedge fund to work for too. So you're my friend, my trading warrior brother. Happy New Year, and may you have a very green year. Okay, buddy.
Yes. I hope all of us have a green year. So I really appreciate it. Have a good, safe, and healthy green year.
Okay. Yeah, I need your last name. What's the last name again, Ronit?
Ronit S.
All right, leave it for me on Twitter because Steve wants a last name for the write-up. So thanks again, buddy. So that's a wrap, everyone, for a wonderful Wednesday. Ronit giving you a lot of food for thought, and the last days of ancient sunlight. Okay.
Oh, you saw that, right?
Yeah, it's up there now.
Yeah, actually, this is the most interesting part. Why they're actually looking at 2030. So I'm really sorry. 1 minute.
That's all right.
The most interesting part is every 12 years, what happens is the population goes up by 1.2 billion. So you have birth of Jesus. So that's why they're actually looking at 2030. You see 2011, that was the commodity crash. 1999, 1987, these are all important years. So it's funny that it matches. So
yeah, it is something.
It's something like the James Bond movie. What's the new title? Something like No Time to Die. So.
Oh yeah, and it's also like a tapestry. When you look at the back of a tapestry, it's like random, chaotic threads, and then you turn it around and beautiful patterns. So, all right, great way to start the new year. Thank you again, Ronit. And
thanks,
everyone in FACE, have a great day. We'll see you tomorrow. Remember, don't just count your pips or count your cycles, count your blessings. We'll see everyone tomorrow. You're welcome, Sonny, Laura, Alexandra, Ronit. Thank you again. Adios.
Thank you.